Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, June 13th, 4:36 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. After 2 years of doing videos every day, this will be my last one until Monday, June 24th, as I'll be taking vacation. You'll be in the capable hands of Ed Zhang and Connor Bates for the next week or so. Markets close next Wednesday, so there'll be 5 videos before I am back in the saddle. And then they'll be mixed in on Tuesday and Thursday going forward, and I'll keep doing Monday, Wednesday, Friday. So let's get right into it. State of the market, we're in an uptrend. You can see the trend gauge over here. We've got leaders with the nice green arrow. Not so uh, not so clear cut on the indexes as we continue to have green arrows because we overweight the Dow and the not the Dow, the S&P 500 and the Nasdaq 100, keeping the green arrows there, but still dragging down the overall score with the yellow sub arrow. The Dow, mid caps, and small caps continue to be weak, but not impacting big tech, which is carrying the big cap tech heavy indexes. But 4 straight all-time highs. All 5 indexes still above their long-term 200-day moving average. Market never gets into serious trouble as long as we stay above that 200-day moving average. All bear markets occur. If they're going to occur, they're going to occur under the 200-day moving average. So we pretty much stay invested, not fully invested, but at least with a core S&P 500 or other index allocation. Normally, what happens is we break the 20-week or the 100-day moving average. We will have been stopped out of most of our individual positions. But for right now, it's 4 green arrows. So what happened today? Before the open, PPI came in cooler than expected. JOLTS jobs reports. So job openings weaker than expected, continuing claims higher than expected. That is paints a weak employment picture, and between weak PPI and the jobs report, that is more pressure off of inflation. The markets initially reacted positively to it. Futures opened with a slight gap up, and yields dropped. We pulled back most of the morning, rallied in the afternoon. S&P 500 and Nasdaq 100, 4th straight all-time highs. Here are the final numbers on the day. 21 over 21 leaders list was mixed. 10 up, 11 down. Down on average of 0.16%. The big eight, led by NVIDIA and Tesla, up an average of 0.45%. RG8, this is our 8 growth ETF composite, weak on the day, down 0.5%. S&P 500 opened up 1/3%, pulled back down lows near 5,400. So about 1/3% pullback, but rallied uh, most of the afternoon. It was a bifurcation pullback in the morning, strength in the afternoon, ended up by about 1/4%. Equal weight, the breadth it's not there. Equal weight down 0.28%. NASDAQ 100 gapped up 0.75, pulled back, rallied, ended up a little better than 0.5%. Equal weight down 0.4. Dow down 0.2, mid caps down 0.6. Russell 2000 small caps down 0.88. Global diversified 60/40 stock and bond just barely negative. That was with stocks down, bonds up, as yields did pull back most of the day and trended most of the day as well. Our in-house GROTECTION portfolio up 0.20%. Let's get into the details. We'll start with the chart of the S&P 500. Each of these last 4 blue bars indicating an all-time high close, very clearly led by tech. Let's go straight to the NASDAQ 100. 4 straight all-time highs there as well. Note the relative strength line on the NASDAQ 100 confirming that. Let's go back to the Dow and show the intraday 5-minute chart. You can see here's the gap up and then just trended lower all morning. Did an about face right above the 5,400 level at 12:30 and trended higher the rest of the afternoon. Still didn't clear the highs of the intraday highs, I should say, of Wednesday's FOMC meeting, but all-time closing high on the day. Let's go to the NASDAQ. Sorry, the Dow Jones Industrial Average. Yikes. Can't get back above the declining 50-day and the declining 21-day, and relative strength continues to be abysmal. Let's go to the mid-cap S&P 400. After getting above the 50-day and 21-day yesterday, giving it back, closing back below both. Relative strength also not what you'd want to see. And Russell 2000 small caps just can't get it going either. After clearing yesterday, the 21-day and the 50-day, breaking back below the 21-day, closing basically right on the 50-day. Just can't get any sustained momentum, but this does tends to trend strongly on a relative basis, one way or the other. This relative weakness, it'll happen. Here's a good example of it back from November to January, just an absolute screaming rally from 1,600 to 2,100. That's 30+% in 2 months. So when they get in gear, and it's probably going to take a pullback in interest rates to get them in gear, a clear commitment and actual pullback. But ironically, that might be met with some economic weakness. So we will let the market tell us what to do, as always. Let's go to the VIX. VIX with an 11 handle now, closing at 1194, down 0.83%. Makes sense. All-time lows in the VIX, all-time highs on the indexes, S&P and NASDAQ 100 anyway. On to the dollar. Strong day in the dollar today. Back above the 21 and 50-day moving average, up 0.5%. Precious metals did not like that. Gold down 0.82. GDX, gold stocks down 2.5, and silver down 2.2. Bitcoin weak as well. IBIT. Another attempt to get back above the 21-day, but couldn't do it, but still holding the 50-day, down 1.4%. On to bonds, third straight up day in bond prices and a new high. Third day up in bond prices, that means third day down in bond yields. Here's the TLT, the long bond up 1.47%, breaking out above last week's highs. Here's the yield breaking below last week's lows, down 1.1%. And TNX, the 10-year, down 1.3%, also breaking last week's lows. That is our interasset correlation chart section. Let's get to the tail of the tape and then some individual chart names, or some charts, not chart names. So the news, PPI, very cool. JOLTS and continuing claims didn't meet expectations, and that showed futures popping and yields dropping. As I said, once the market opened, we did pull back but rally in the afternoon. Day count 3 days up. 9th day above the 8-day exponential moving average. 10th day above the 21-day moving average. Big bifurcation in sectors, not a lot positive. XLK, XLRE, and semiconductors. On the downside, oils, software, big software and cloud software, gold, and silver stocks. ITA, that's aerospace, KRE and KBE, banks, XLI industrials, C communication services, IYT transports. And still we've got all-time highs on the NASDAQ and the S&P and GROTECTION as well. We're fishing in the pond with the big bass, not the minnows, not the, I don't know. I don't fish. It's one of the most boring things on the face of the planet as far as I'm concerned. I know that probably offends some people, or they are just, well, whatever. I'm getting off on a tangent. Only one change in the portfolio today. Bought SMCI, changing character possibly on SMCI. We're always on the lookout for former leaders that are in the process of forming bases. When they come off the bottom with volume and price strength, they have our attention. This jumped our adjusted beta up from 1.6 to 1.67, just a starter position, very volatile stock. Bottom line on the day, yields down on PPI and JOLTS, fourth straight all-time high for the S&P 500 and the NASDAQ 100. Let's kick the charts off with SMCI. And what you can see here is this climax run that it made, pseudo climax run back in February, pulled back hard, made highs again, pulled back again, and then just making a big series of lower highs and lower lows until mid-April. When the market started rallying, we did start making a series of higher lows to go with. Here's this downtrend line. You can draw this several different ways. You could draw it here, say it broke out, and then formed another downtrend line and broke out of that. But either way, this is what has my attention here. Maybe it was the AVGO or Broadcom earnings reaction that made, I don't know, the market realize, hey, SMCI, they're key part in infrastructure build out. It's rested long enough. Let's give it a shot. Well, the market gave it a shot and we gave it a shot today. Up 12.4% on almost double average volume. Big change in volume character too. You'll notice all these big spikes to the downside after this massive rally up that it had. So this is a pocket pivot and changing character on volume, also changing character on price. It may end up just being a nothing burger, and it might end up being just a one-day wonder, like it was back here when it came up through the 21-day moving average, but then folded. But the risk reward we think is in our favor here. Should hold the lows of today in this bottom panel that I drew of the higher lows. So nothing's guaranteed, of course, but the risk reward seem there, and certainly fundamentals are still there on SMCI. Also accompanied by VRT making this turn from an egg back into a tennis ball. We talked about that in the podcast this week, but some volume coming into this one as well. So two stocks from the same, serving the same purpose with the same action. It's good to see confirmation there on VRT, but we went with SMCI. Dell, same situation, breaking a little downtrend line here since it's gapped down on earnings on above average volume. So you did see money flowing back into the data center names today after AVGO. Let's show that. That's Broadcom. They kept the old AVGO symbol from years back, but 260% above average volume, up 12.2%. It had formed a nice flat base here, shook out below the 50-day moving average, started to come back, big volume today. It has our attention again. 10-for-1 split. We probably won't buy this until after it splits if it continues to act well. We're salivating over this CMG split. We just can't buy this for clients because of how big it is, but it's got the 50-for-1 split coming up by the end of the month, making all-time highs with a nice bounce off of this 50-day moving average. So lots to look at, plenty of leadership, plenty of weak stocks too, but we avoid the laggards. So if it gets to the point to where there are no leaders, the market will tell us by all of our stops taking us out of the market, and most likely deterioration in the S&P 500 and the NASDAQ 100 indexes as well. So let's take a look at the top 5 from today's action. I'm in the wrong folder. Here we go. SMCI, we bought that. NVIDIA continues to just be a champ. Look at how it's been riding this 8-day exponential moving average higher for 5-6 weeks now. All-time highs again after its split. Pure Storage continuing to ride the 8 over the last week and a half as well, up 2%. Micron, and we own all 3 of these. they're all in the data center hardware space as well, up 1.7%, Micron making all-time highs. ELF right at the top of this little handle here. It shook me out below the 21-day earlier this week. This is just one that I just seem to never get right. That's okay. On the downside, a couple things that we own. 3 of the 4 to the downside are things that we own, but the winners made up for the losers. Normal pullback on First Solar. Like to see its below average volume compared to the 3 prior days where volume was above average. Just finding resistance at this 300 level. Very clearly a leader. Spotify, we don't own this, but it bounced at the 50-day moving average and is trying to get back above the 21, but still down 3% on the day. Coin, normal pullback with Bitcoin being weak, down 2.87%, still holding the 8-day. ON pulling back for the second day, undercutting and reclaiming the 8-day, down 1.7%. And Pinterest, we don't own this, but a nice little 4-day pull back to the 8-day after 2 strong days up on above average volume. That's going to wrap it. As always, like to hear from you. Emails don@revereasset.com. My partner Dan Stewart is dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Reminder, our flagship portfolio named GROTECTION. Common sense approach to the markets. It's easy to say, it's not so easy to do. We've spent years developing the rules that get us to participate in market uptrends, pull back a bit during market mild corrections, get the heck out of the way in market downtrends. And we've re-engaged after this most recent pullback undercut of the 21-day moving averages. We display our rules and what we're doing, most transparent advisor on the planet. And we mentioned a little bit back that we just topped $150 million in assets under management. We're coming up on 160 million now, thanks to this nice recent rally and some fantastic new clients coming on board. And if you're interested in being one of those, by all means, reach out to us. And with that, I'll wrap it for Thursday, June 13th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Make sure Ted and Connor kick off the video with hello, investors, or they're going to have to deal with me. I'm sure they will. That's what the vote ended up saying. 65% said yes, you got to keep it. So we'll keep it. Thanks for listening and have a great day.